Very good afternoon to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's webinar on bank branch audit. As we all are aware that the topic is very relevant for these days and bank branch audit are going to start, and we have covered almost all the branches for these physical seminars as well as the webinar. Today is the second series of this webinar. Yesterday we have organized one webinar where we have conducted audit of loans and advances, and today we are going to cover long form audit report. In order to tackle this, we are having with us very eminent speaker CA Lokesh Gupta ji. We are also having with us past chairman of Amritsar branch CA Sudhir Kumar Khera ji. I welcome you, Sudhir sir, on this double.
Thank you, sir. Thank you, sir.
We are also having with us CA Gaurav Meneji, another moderator of today's webinar. So before we formally start, Chairman AASB will join us in a few minutes. He's stuck up in one of the meeting. So I request the past chairman of Amritsar branch, CA Sudhir Kumar Khera ji, to please start the proceedings of today's webinar. Over to you, Sudhir sir, please.
Thank you, sir. Good afternoon, everyone. I am thankful to the worthy chairman, Auditing and Assurance Standard Board of ICI, CA Dr. Sanjeev Singhal ji and his team for organizing very informative and knowledgeable webinar series on bank branch audit. And today is the day 2 of the webinar, having focus on long form audit report. I am also thankful to Auditing and Assurance Standard Board, its chairman and team for providing me opportunity to act as one of the moderator for the seminar of today. I welcome CA Dr. Sanjeev Singhal ji, Chairman Auditing and Assurance Standard Board ICI in absentia. Worthy guest speaker CA Lokesh Gupta ji, my fellow moderator CA Gaurav Meneji ji, and all respected participants to this seminar. I also welcome Shri Anil Dilal ji to this webinar. As we know that bank auditor says statutory branch audit is very prestigious audit and everyone was awaiting its appointment. It's a matter of great pride and honor that number of our CA firms have received appointment through software developed by ICI, resulting into transparency in distribution of audits. Even a number of category 4 firms have received audit appointments, which is positive effort made by ICI. In statutory branch audit, advances portfolio is extremely important to be verified by branch auditors. ICI had arranged a detailed webinar yesterday on audit of loans and advances in bank branch. Today also, this webinar is on long form audit report of bank branch audit. The RBI revised the LAFAR form from 2021 onwards, wherein various additional points were added in the format. What the speaker will dissect and analyze various important components of LAFAR to enable us to carry out our audit work effectively, efficiently, and in true spirit. These may include selection of advances accounts for audit, audit of system of internal control in banks, such as control over cash, balance with banks, advances portfolio, including IRSC norms, insurance, renewal, review of limits, credit appraisals, stock statements, valuation and existence of securities, documentation, review and monitoring, deposit portfolio, expenses, interest received and expended, etc., etc., etc. What this speaker is having vast knowledge and experience in the line, and we will learn a lot from him. We wish him all the best to enhance our knowledge through his knowledge and experience. I request my peer moderator, Shri Gaurav Meneji, to put before us the profile of the speaker and continue the proceedings further. Participants may put their queries during question answer or query session or in chat box. Thank you. Jai Hind, Jai ICI.
Thank you, Sudhir ji. Thank you so much. So I welcome Sudhir ji, Lokesh ji, and Anil ji for giving me this opportunity. So I'll just put a brief about Lokesh ji. CA Lokesh Gupta is a practicing chartered accountant. He qualified as a chartered accountant in the year 1998. He did his LLB from Delhi University in the year 2001. He's a first rank holder in DISA and did his FAFD in 2018. He is a practicing chartered accountant as a partner with Messrs. Shyam S. Gupta and Company. He has 20 years experience in conducting bank branch statutory audit. He has more than 16 years experience in conducting concurrent audit, stock audit, and internal audit of bank, both in public and private space. He has conducted audit of specialized unit in banks and such as currency chest, He has conducted audit of outsourced areas in banks such as agencies involved in refilling ATMs, including audit of ATMs itself. He has been a speaker on statutory audit and concurrent audit of bank branches at large number of seminars organized by branches of ICI and study circles. He's a speaker on FEMA, FCRA, international taxation, and other areas related to Forex in various seminars. He has also provided training to bank staff on operational areas, including Forex, at a number of occasions. He has contributed to the professional development as well. He has contributed as a member of group on certification course on concurrent audit of bank branch under IASB. He is presently a faculty for certification course on concurrent audit of banks. He has contributed as a member of group formed to prepare a minimum audit checklist for concurrent audit of banks and revision of Ghosh and Jalani committee under PDC. He has conducted statutory audit and internal audit of large number of units in both public and private space, and he has been providing consultancy, especially for FEMA international taxation, to large number of clients, including listed companies and foreign companies. So I would request Lokesh to please enlighten us with his knowledge, and I hope everyone gains a lot of insight on LFAR from him. Thank you.
So, good afternoon, friends. First of all, my thanks to Sanjeev ji and AASB and Anil ji for inviting me here to share my views on this very important topic of LFAR. And Sudhir ji is here, and Gaurav ji, thank you so much for introducing me. Now, this area of LFAR, generally I say LFAR is kind of a checklist for bank audit. If you are able to complete your LFAR, you have done something like 90% of the work which you are expected to do in a bank audit. Of course, there are certain areas which are still left, like maybe some certificates which are not covered by LFAR, but practically if you are able to complete your LFAR, so generally what I generally tell people also and advise people also, and what we have been following practically in our course of work is that we try and complete the LFAR, and in the process itself, we are able to complete the bank audit in itself. So we'll start off. I hope Sanjeev ji joins in between and he shares his view, which is very important. So LFAR, Anil ji, is it visible?
Yes, sir. Yes, sir. Yes, sir.
Great. So long form audit report, of course, as Sudhir ji told you, it was modified 2 years back. We have already done 2 years on this modified format. This would be the 3rd year. And of course, what has happened, if I say it on a lighter tone, from a long form audit report is that it has become a very long form audit report. The format have increased, the requirements have increased, the expectation of the RBI has increased from the statutory auditors. Of course, sometimes it provides a challenge to us in terms of the manpower and in terms of the timelines which is provided to us. So that may be a concern, but of course, this is something which we have seen that the format have increased. They are not only looking at it from the financial angle, they are looking at it from the management angle also. They are looking from the system audit angle also. So a lot of things have been added. We'll try and analyze each of them and try and understand what are the responsibilities and how effectively we can complete the work of LFAR. Now, the biggest point which I wanted to convey to you before we actually start off is what RBI has also given as the guiding principle in terms of LFAR, and which is very important for us as an auditor. I don't think the RBI needed to tell us that, but somehow we forget what they have actually told us, so it's better to revise. So if you look at the last paragraph here, it says whether any of the comments made by the auditors in the LFAR is adverse, they should consider whether a qualification in the mail report is necessary. So sometimes what happens is during the course of the audit, we find out certain discrepancies, maybe some NPS, and it is advised to us. It is advised to us that you please mention that in the LFAR, and in case it is so considered as relevant by the central statutory auditor, they would consider it in the LFAR also as part of their main report also. So this is where the RBI guidelines on this part becomes very critical for us to understand. They are clearly stating that in case there is an adverse comment in the LFAR, the auditor also need to see whether a comment is required in the main statutory audit report. Of course, they also clarify, and it is very apparent also, that every adverse comment in the LFAR would not necessarily result in a qualification in the mail. So this we have to keep in mind. What should be considered as part of LFAR only? What should be considered as part of LFAR along with your main statutory audit report? And please also keep in mind that in the main statutory audit report, no reference can be given for LFAR. So it should be separate to the other reports. It should be self-contained. It should be independent. It should not give any references to any other document per se, any other reports per se. But LFAR, you can have comments mentioning what you have done in the main statutory audit report. So to that extent, we need to understand that LFAR would encompass a lot more areas. But of course, in case there are any adverse comment, please also consider that a qualification in the main statutory audit report may be required. Now, coming to the specific areas which are important. So, if you actually look at LFAR, it is basically divided into four areas basically. So, one is assets, liabilities, then it talks about profit and loss account, and then some general areas are covered basically. So, basically, if you look at the audit also, so you are basically covering both assets and liabilities in the balance sheet. You are covering the profit and loss account, and you are covering the other general area. So, all of them are basically getting covered through your LFAR. Starting off with the points, the first point is cash, the most simplest one, but can actually provide a challenge also. So when I look at from the cash point of view, I'll only touch upon some important aspects of it and the changes which has happened. Of course, they happened nearly 2 years back, but still we'll touch upon the important aspects of those changes which happened. So it talks about first, the point talks about cash maintaining effective joint custody. So joint custody means, so basically banking works on the concept of maker and checker. You cannot entrust any important responsibility to a single person. So there is a concept of a maker and checker. They have to be two persons. It makes it difficult to commit a fraud. It makes it difficult that a mistake is undetected. So basically that is the concept. So it applies to physical custody also. Like in case of cash, you have two persons who are holding the keys of the cash. A single person cannot operate the vault in which the cash is kept. So you have two custodians which are there. But the word here is effective joint custody. So if you look at what is the policy of the bank, every bank would have a policy that the cash needs to be kept in effective joint custody, right? If you see the key register, it would actually say that the keys are with two different persons. But when the word is used here is effective joint custody, it means, say, when you go for the cash verification, did a single person operated both the keys or two persons operated their respective keys? That would be the actually the test of effective joint custody, right? So that is very critical. Then periodic interval. So you are not the only person who's going to check it. The bank, the branch management has to also do a verification of the cash at a surprise basis, a self check. A third person, maybe the branch manager or the operations manager, or a third person other than the persons who are handling the cash keys, have to actually check the cash on a surprise basis to see what is the evidence available, check whether that verification has been done or not. If it is so done, please mention on the dates, mention in your documents what dates you have checked on which there was a periodical interval verification by a third person. Keep that in your record. Then third, it asks generally the point is there is a limit fixed by the bank for how much cash can be kept at the branch, and you verify the actual cash in hand and you verify whether the cash kept was in excess of the retention limit. The word here is very significantly, sir. So please don't mention a case where, say, the limit is 50 lakhs, the amount of cash kept may be 50 lakhs, 50,000. It is not significant. The word is significant difference. And then when you report upon it, the importance would come not from the point where you write that generally the cash is kept within the retention limit or generally the cash is not kept within the retention limit. Say, take a sample for 1 month. Check for how many working days, how many days the cash was kept within the retention limit. mention it as a percentage. Say for X number of working days, we checked and the cash was in X number of days was kept outside the retention limit. And this is the percentage of that amounts which are kept outside the retention limit. That would give a significant impact in terms of whether the branch is actually able to maintain cash within the retention limit or not. Writing generally or mostly would not help, would not actually give any benefit to the management where you are reporting on these aspects. Then the bank balance in the ATM tally with the amount of balance in the you have to mention if the cash basically the year end scores. This would be first applicable only in case the ATMs are being funded, are feeded by the branch. In case the ATMs are not handled by the branch, say a third party is handling the ATMs, then in that case, you are not responsible for verifying this. Then a third party is basically responsible for verifying the same. In case the branch is responsible for that ATM, then you will have to check the year-end score, match it with the balance in the GL and see whether there is any difference. Then insurance cover, generally what we have seen is the insurance cover is taken at the bank level. It is not applicable at the branch level. But in case it is, if it is in any particular branch being taken at the branch level, you can verify the insurance cover. Basically, the purpose is whether the cash cap is within the insurance limit and whatever conditions are attached to that insurance policy, whether that has been followed. Because in case the policy conditions are not followed, then in case if there is any loss at the branch level, then the insurance company might say no to any payment of the any claim made by the bank. So that is what is basically required to be verified. Then balance with Reserve Bank of India, State Bank of India, and any other banks. So it says for branches with treasury operations. So basically it is covered only in cases where they are treasury operations. So you will have to basically verify. Generally, branch level, the central statutory auditors would be actually handling branches which are basically looking at treasury. They are A category branches. Generally, you will not find branches which have which are allocated to branch auditors, which are basically having the treasury operations. But in case it is so allocated, you will have to obtain the balance confirmation with the bank, with the Reserve Bank of India or the State Bank of India or any other bank for that matter, where the balance is maintained. Please check the differences. Check at any items where the difference is maybe on account of any item which should have been accounted in the profit and loss account. So it may require a MOC also from your side. So this is what is basically required to be verified. And then of course, old outstanding entries you need to verify. Then money at call and short notice, generally it is not there. So we seek a confirmation from the branch that whether any money at call or short notice has been kept. Generally it is not kept at branches. So we are basically skipping. Again, for investments, it says for branches outside India. So of course, branches outside India, practically the branch auditors are not covering. So we are skipping it. Then come the most important area, which would significant impact on our audit, which is basically the advances. So if you look at the balance sheet of any bank, any branch, the advances would constitute the biggest chunk of assets in the bank. And the LFAR is a unique audit or the unique report where the auditor is expected to provide the samples also on the basis of which he has done the reporting. So this become very, very critical for us as an auditor. Not only we have to check, we have to also maintain the sample. We have to also disclose the sample here. And they say that one, you have to do 100% verification of large advances. What they say is a large advance. Large advance are those in respect of which the outstanding amount is in excess of the 10% of the outstanding aggregate balance of the fund based and non-fund based advance of the branch or rupees 10 crore, whichever is less. So the fund base and the non-fund base. Non-fund base would not appear in the balance sheet per se. It would be a below the line item. So you will basically have to add the fund base and the non-fund based items, both the items, then do a 10%. If the 10% exceed 10 crores, then 10 crores would, any advance of 10 crores and above would be your large advance. If it is less than 10 crores, then whatever is the amount, 10% of your fund base plus non-fund base, any advance of that amount or above that amount would constitute a large advance, which has to be compulsorily covered under audit And of course, you will have to take more samples to cover the specific points which are mentioned in the LFAR to basically cover all the points. And that samples, one, you have to check, you have to maintain those samples, you have to basically state all the samples which you have taken here, then do a total, measure it with the total outstanding of the branch, which would give you the percentage examined. Now, a lot of times when we speak to various groups, generally there is a question, what should be the ideal percentage examined? Or is there any prescribed percentage from anybody as to how much should be the minimum percentage which should be covered under audit? So there is no prescribed percentage, there is no minimum percentage. That would depend upon your case to case. One, depend upon the nature of the branch which you are handling. So in case you are say handling an agriculture branch where there are large number of advances of smaller amounts, even maybe 5% or 10% would constitute a challenge, whether you will be able to even be able to cover 10% of the advances. But in case you are handling a large corporate branch, then maybe you will have to cover a lot of advances because they would get covered under large advances. In that case, maybe even 50% of the advances can be easily covered under the accounts examined. So that would depend upon case to case. You will have to basically look at from that angle. Now, for large advances, what RBI says is that a transaction audit or account specific detail to be seen and commented upon. So what they are expecting you to do is not only look at the advance per se, not only look at the documentation per se, please also look at the transactions which are happening in the account. So then again, it provides us a challenge that you have to look because large advance, there would be a lot of transactions which would be happening. So please look at, but you are required to do a transaction audit. It does not mean you have to see each and every transaction. It only means that you have to see it from a overall perspective because uh, each transaction you will not be able to verify. So basically, you will have to do it from the overall basis only. And for other cases which are not large advances, in that case, you have to basically look at the documentation per se. Of course, you can also look at transaction also. We'll discuss some of them which are very important for us to verify. But the RBI does not ask you to do that specifically. Okay. So very important. Now, the first portion. So when we look at a loan cycle, credit appraisal process comes first, right? So credit appraisal, the first point is whether the branch has generally complied with the procedures, instructions of the controlling authorities of the bank regarding loan application, preparation of the proposal for grant, renewal of advances, enhancement of limit, etc. So the first thing which would come is somebody is interested in taking a loan. He will go to the bank, fill a loan application, give it to the bank. Now the requirement is that in case you go to the bank, fill up a loan application. It has to be, there should be a register, this should be maintained where all the loan application should be filled. In case something is accepted, a loan is granted, then of course there would be a sanction letter which would come. In case the loan is rejected, the reason for rejection of the loan also needs to be provided to the borrower. So please check whether there is a process, whether a register is maintained, whether some kind of control is maintained as to how many loan applications have been received, whether there is a communication in terms of rejection of the loan application, the reason for the rejection that you need to verify. Okay. And of course, for this, you will have to also obtain from the branch the procedures, the instruction, the loan policy, the loan manual of the bank, because unless until you have to compare the process with the procedures and the instructions of the controlling authorities. So unless until you have the instructions from the controlling authorities with you, you will not be able to verify and check whether the process has been followed or not. Okay. So the basic step is to first obtain the loan policy and then verify whether the process is being followed by the branch management. Now, the next point is in regard to quick mortality. Okay. Now, quick mortality, this was a new point which was added in the new format. What is quick mortality? Quick mortality is where there is a account which becomes a non-performing asset, NPA, within a short time, say within 1 year of sanction, or in case there is a takeover case, within 1 year of takeover. Now, what is the challenge? Why we are so much worried about quick mortality? One, the quick mortality provides a question to us. It raises the question whether the loan given at the initial stage was right or wrong, whether there was a fraudulent intention on the part of the borrower, or maybe there was an involvement of the branch staff because the account has become bad in a very short period of time. So when you find there is account which has become an NPA within a short period of time, within 1 year, then not of course, not only you have to report it here, it is very important to check deeply in detail what was the reason why the account become bad, what is the staff accountability, whether it has been taken care by the management, and of course you will have to see whether there was a fraudulent intention, because in case the account had a fraudulent intention, it is declared as a fraud, then in that case of course the IRAC norms provide for something more from us, and of course you are expected to ask the management to report it as a fraud. So this you need to verify in case of quick mortality cases. Then next point is in relation to whether the borrower account, the applicable interest rate is correctly fed into the system. Now, when we say the word correctly fed, so it means you have to compare the interest rate fed into the system with the interest rate given in the sanction note or the renewal note. So this is what you are required to check. Please, in the sample which you have verified, you will not be able to check it for all the cases, but in the samples which you have verified, please check whether the sanction note renewal rate note, what is the rate of interest mentioned and what is the rate of interest mentioned in the system. Not only that is to be verified, also please check cases where rates have been modified during the year. So rates may have been correctly fitted into the system at the initial stage, but there has been a modification which has been done. It may be deliberate or it may be done by a mistake. Or I have seen in cases, last year we have reported, we were doing branch audit for 2 branches. In both the branches, we have reported at least 15 accounts where the rate of interest fed into the system was wrong when compared with the sanction letter or the renewal. The problem was not at the time when the sanction was given, the rate was correctly fitted, but when the renewal happened, at that point of time, the rate of interest was modified and it was incorrectly modified. So you need to verify. Then the third is, please also check that the rate of interest are generally fed as a code, not as an actual percentage, not as an actual numeral. The reason is in most of the floating rate of interest, the rate is linked to is say basically it may be linked to some external benchmark or it may be linked to some internal benchmark like MCLR or maybe repo rate. So it is generally linked to that rate. So they basically the banks devise a code basically that you fill up that code, and on that basis the rate of interest keeps on changing with the benchmark which is set along with the account, right? So please also check that. Then the most important on this is the value dating in the interest rates. Now, what is the concept of value dating? That is very important for us to understand, not only in the case of interest rate, but throughout CBS banking, you'll have to understand there is a concept of a value dating. It can be in interest rates also. It can be in case of financial transaction also. What is value dating? So basically what happens in case of CBS is that CBS does not allow you to do a backdated entry, at least at the branch level. Maybe at the level of data center, they may have power to do a backdated entry, but at the branch level, that power is not given. So in case any changes is to be done with a backdate, then the system would not allow you to change the transaction date. The transaction date would be the current date. Okay. But in case you have to give effect from a backdate, you will change the transaction date would remain the same, but you can change the value date. So there's a column for value date that you can change. In case you change the value date, then what happens is the system would impact, would make changes, would for all purposes calculate that change from the value date itself. So the transaction date and the value date generally would remain the same. Wherever there is a change, you have to verify the change is genuine. I can give you an example where actually value dated interest rate change may be required. Say somebody has taken, an exporter has taken a loan for export, basically what we call as a packing credit limit. Now, that packing credit limit was given, it is given at the concessional rate to the exporter, because he's doing as a export promotion, it is given as a concessional rate, right? Recently, there is a RBI circular of FAP 2024, where the RBI has said that the rate of interest offered to an exporter cannot exceed repo plus 4%. This is the maximum rate of interest which can be charged to an exporter. And this being the first year where this change is applicable, please, when you go for an audit this year, please check whether the rate of interest given to an exporter to whom an interest subvention is to be given cannot exceed repo rate plus 4%. Okay. Now that concessional rate is given to the exporter, and ultimately the exporter did not do the export. He was not able to export the goods on the basis of which he has obtained the that export packing credit limit. Now, the requirement is that the concessional rate should be withdrawn, and it should be withdrawn from the date the disbursement was given. So, what would happen, say, after 6 months or 8 months or 9 months, when the bank realizes that the customer has failed to do the export, they would do a value dated change in the rate of interest from the date of disbursement. So it may be in an actual case where the value dating may be required, but you will have to basically check it whenever you go for verification. Okay. Whether the interest rate is reviewed periodically as per the guidelines applicable to floating rate loan links to MCLR EBL. Now this is again very critical. And recently I was just looking at some banks got penalized for some violations by the Reserve Bank of India. One of the banks got penalized because the reset interval was not fitted in these MCLR or EBLR rates. So these EBLR or MCLR rates need to be also reset, and in the loan account you put the frequency of that reset. The bank has failed in some cases to put that frequency and has been penalized by the Reserve Bank for such a default. So we need to verify such whether that is being reviewed periodically. Of course, the table would keep on changing. Don't look at the table. So there would be a table of MCLR or EBLR in the CBS system that would be fitted centrally. That would keep on changing. But in this account per se, there is a reset frequency. At what frequency the rate would be modified, you have to check whether the reset frequency has been correctly fitted into the system or not. Okay. Then it talks about renewal and rollover. Now, this is again one of the major cause of concerns for auditors, and where there's a divergence of opinion between the auditors and the bankers. Bankers, in certain cases, feel, and they have certain times issued a circular also saying that they have power to do a renewal or a rollover of short-term loans on a frequent basis, on repeated basis, without obtaining documents from the borrower. My view on this is, and of course, it is supported by the RBI's circular on IREC norms, 1st April 2023. And there was a specific circular which came on August 21, 2020 from the Reserve Bank of India, which talked about frequent and repeated ad hoc review or renewals. And it said that frequent repeated ad hoc review renewals without obtaining documents, that financial document, is a cause of regulatory concern. And it further said non-capturing and or inaccurate capturing or review renewal data itself is a concern. So what we have also seen sometimes is that the renewal date. So you go to the branch, you ask them to provide the list of all the accounts with the last renewal date. When you check the renewal date, it is mentioned, say 1 month back, the renewal was done or review was done. The biggest problem is the date generally is the same for either for renewal or review. So we are not able to make out whether it is a short-term review without document or it is a proper renewal, right? Secondly, the dates are put without taking any documents, without even sometimes any renewal letter, without any request from the customer for the renewal of it. So only the dates are being modified in the system. It may be done deliberately also sometimes. It may be done by mistake also. So we need to verify. We should not only go by the system generated report. We need to verify in the sample cases with the files, loan files, see whether the renewal letter exists, whether the letter from the customer accepting the renewal exists or requesting the renewal exists. So that we need to verify. Then it talks about correct and valid credit ratings. Okay. Now, credit ratings, it is basically talking about bank loan ratings which are given by some external companies which are authorized for these bank loan ratings. Who are the accepted agencies? Who are the accredited credit rating agencies? So the list is CARE, CRISIL, ICRA, Equite, India Ratings, and Infometrics. These are the credit rating agencies which are accepted, which are accredited by the Reserve Bank of India, whose rating would be accepted. Brickworks was removed in 2022, so their rating cannot be accepted now. Then, of course, the reason why they are specifically asking you to check for correct and valid credit rating is because it has an impact in the Basel II norms in the appropriate risk rate as per the standardized approach under Basel II. And it would also impact sometimes the interest rate which is being charged to the customer because the risk would change, and based upon that, the customer's interest rate also gets modified. Now, the word is correct and valid credit rating. So correct, somebody would say, I'll look at the audit that loan file. There would be a rating which has been issued by any of these credit rating agencies. I'll match it with the rating which has been fed into the system. But this does not end the whole story. You will have to also look at the valid. And what is the importance of the word valid? Any rating given is not absolute. It is not for say a 1 year period or 2 years period or 3 years period. In case there is any development on the positive or the negative side, more so on the negative side, the credit rating agencies actually, before the period is over, they can downgrade or upgrade the rating. So what is important for us is that to check for the validity of the credit rating, please go to the website of that credit rating agency. Check what is the credit rating displayed there. In case there is any change in the credit rating which may have happened from the document which is being shown to you, then the correct and the valid credit rating needs to be fed into the system. So this is your responsibility. Okay. Then it talks about sanctioning and disbursement. Okay. So it talks about basically the credit facilities have been sanctioned beyond the delegated authority or limit fixed for the branch. So the first thing which needs to be verified here is that you need to obtain that chart of financial power on the basis of which you can check what was allowed to be sanctioned by the branch, what was allowed to be sanctioned by the regional office or the zonal office, and what level was required to be sanctioned by some credit teams which are created for the purpose, right? So first and foremost, the first point which is important here is that you need to obtain that chart of financial power, without which you will not be able to check this, right? In case there is any such case where the power have been exceeded at the branch level, whether the reporting was done to the appropriate authority and a confirmation was obtained from them, and that is available for you to verify. In case it is not so, then you will have to appropriately cover that in your audit. Then whether advances has been dispersed without complying with the terms and conditions of the sanctions. So you will have to look at the sanction note, look at the terms and conditions which have been stated therein, and check whether they have been complied. Generally, the bank officials also issued a compliance certificate. They also send a compliance certificate saying that all the terms and conditions they have verified have been actually checked by them, have been complied with. Also check that compliance certificate, whether that has been filed, whether the branch is themselves verifying compliance with the terms and condition or not. This is very critical. Okay. Then did the bank provide loans to companies for buyback of shared securities? Now, I'm sure nobody has seen a loan where loan was sanctioned for buyback of shares or securities. Why I say that nobody has seen such a loan is because if you look at the master circulars on loans and advances, statutory restriction, no bank can provide finance for buyback of shares or securities. Then why such a question has been raised in the LFA? Of course, RBI is aware that such a loan cannot be granted. Then why they are asking us to report on it is because the loan may have been sanctioned for some other purpose, but the funds were utilized for the purpose of buyback of shares. So that is what we are required to verify. How can we check that? Of course, the best way is this would be applicable only to a corporate borrower. It would not be applicable to any other person. So please look at only corporate borrowers in this case. Then secondly, the importance here is that there should be a reduction in the capital. Only in case you are finding there is a reduction in the share capital, then I think the buyback of shares would be applicable. So that would become your sample to verify such a things. Okay. Then documentation. So without execution of the necessary document, again, the bank policy, which you have, loan policy, which you have obtained, would tell you what documents are to be executed on what kind of facility. So when you have obtained that loan policy in the samples which you are verifying, you will have to basically check whether the requisite documents have been obtained. In certain cases, the banks have a policy of doing a legal vetting of documents also. So in the loan policy, that legal vetting would also be provided. You can look at the limit of legal vetting, check whether that legal vetting has been done at the branch level. Then it talks about documentation, including non-registration of charge and non-obtention of guarantees. So where do we create charge? Generally at the registrar of companies, CERSAI, motor vehicle authorities, post office in case of any NSCs, KVPs, etc. Then housing societies in case of property being covered by the housing societies, and any authorities which may be relevant for it. Now, here again, the important point is we don't have to only look at creation of charge at the time of sanction of the limit. We have to also check for the updation of the charges to reflect the current position. So there may have been a increase in the limit, enhancement in the limit. There may have been a limit may have been decreased. So the charges also needs to be updated, needs to be kept current with the changes in the limit. That is important. In case of CERSAI, let me also clarify here that in case of CERSAI, there was a circular which came in 2018 from the Reserve Bank of India. Earlier, the CERSAI basically came for guarantee, came for registration of charge where a immovable property was taken as a security under equitable mortgage. Now this has changed from since 2018. In all cases, even where you have taken a security of a stock or a book debt or maybe some intangible assets like some trademark, etc., or even for a property under construction. So you have, say, a purchase of flat in a under construction property, that charge on that under construction property, that tripartite agreement which the bank must have done, that also needs to be registered under CERSAI. So please remember that all kind of charges are to be registered under CERSAI. It is very important. We have last year when we were auditing, and before that also we have seen in case of the bank for which we were doing audit, they were not registering charge for stocks and book debts. So it is very critical that you verify and report it accordingly. Then it talks about advances against liens or deposit have been granted without making a lien on the bank deposits and related accounting in accordance with the guidelines of the controlling authorities of the bank. So loan against fixed deposit. Iska, you'll have to obtain a sample. You'll have to check lien marking of the ATR on the fixed deposit receipt, the physical receipt. You will have to check the lien marking in the system also. And it is very critical. You also check it from the NPA side also. Sometimes we don't even check the area because we believe that they cannot become NPA, but they can become NPA, especially where the margin is eroded. And this we have seen in cases where the interest is getting paid out to some savings account or a current account of the customer, and uh, the loan account, the balance is getting increased every month by the application of interest. So the margin gets eroded and the account, the FD balance become less than the balance in the loan account, and the account can actually slip into NPA. So please be very careful. Okay. Then it talks about review, monitoring, and supervision. So not only the loan giving is a process, the monitoring becomes very, very critical, sir. Most of the times what happens is if effective monitoring is done, then the bank can save itself in case the account is going bad. They can take early actions, which is the focus of the RBI now, to take early actions in all the cases, not to wait till the account becomes very bad. And of course, we must heard of the concept of SMA, special mention accounts, SMA 0, where there is a default of even Monday becomes SMA 0. So you can see RBI is even looking at want banks to monitor cases even when there is a default of even 1 day in the account. So monitoring is very critical for the banks and has been a focus area for the Reserve Bank of India. Okay, so periodical renewal of advances, this we have talked about. The QMS data, you'll have to see the loan policy, in which cases up to above what limit they would obtain the quarterly data, then AOD balance confirmation letter, then financial statements are to be obtained every. So this becomes very, very important. And of course, it is asking for renewals which are pending from 0 to between 3 to 6 months and over 6 months. And in case any renewal is pending over 6 months, please refer to the IREC guidelines and the account may be slipping into NPA category, which you need to verify. Okay. Then it talks about stock and book debt statements. Then it talks about DP properly being computed and the latest audited financial statements. Okay. Now, stocks and book debt statement, again, an area of concern for most of the auditors. Either they are not given regularly or not given in proper format of the bank, or a simple figure is mentioned of the stocks and debtors without mentioning of the details, without mention of the age-wise details of the debtors. So the proper computation of DP itself is a problem. So you will have to adequately comment here on the sample cases you have verified. Plus, now calculation of DP is one part. Updation in the system is very critical. Please also comment on the updation of that DP which is calculated in the system on a regular basis, right? And why it is so important, sir? We'll talk about a circular which came from Reserve Bank of India, which talks about automation of IREC in branches. It talks about the fact that all advances uh, to be downgraded and upgraded on the basis of automated system without manual intervention. We'll talk about it there. So unless until the data is correctly fed into the system automation would fail, sir. If the system is not being told the correct DP, it will not be able to tell that the account is running irregular or the account has become NPA because has not been correctly fed with the correct DP. So when we check this area, please, we have to not only check correct calculation of DP and maybe some register is maintained manually. Please also check whether the same is updated in the system. Now, another area where I've seen a concern practically is in certain banks, what we have seen is that you can only see the latest DP which has been updated in the system. You cannot see the DPs before the latest DP. You are not able to verify those. If it is so, then you need to adequately maintain here. It may require adequate comment in the main statutory audit report also. You will have to see whether you require it to become, of course, LFAR would, there would be comment in the LFAR, but an appropriate comment may be required in the main statutory audit report also. Okay. Then latest audited financial statements are to be obtained every year for renewal, without which a proper renewal cannot be done. Okay. Then stock audit. Now again, the bank would decide what, as per their policy, at above what account limit they would get a compulsory stock audit done. Generally, the limit which I have seen banks taking is 5 crores. Okay. So first look at the policy, based upon which ask for all the cases which are there at the branch, ask them to provide you the stock audit report. In case the stock audit has not been done, you will have to report it here. In case the stock audit has been done, check the compliance certificate issued by the branch that they have complied with the issues raised by the stock auditor in the report and see the impact of that stock audit report on the DP in the account and then correctly calculate the DP. Okay. Then cases of advance to non-corporate entity with limits beyond that is set by the bank where the branch has not obtained the duly audited accounts of the borrower. Now, please again remember, earlier there was some limit which was mentioned in the LFA, which was 40 lakhs. That limit was actually already withdrawn by the Reserve Bank of India. They have said it is now the policy of the bank above what level they would ask a non-corporate borrower to provide a audited financial statement. Now you may say, sir, the audit was not required under any law, not even under tax audit. So it does not necessarily mean that the audit is required under tax audit or any other statute for that purpose. The audit may have been done voluntarily because the policy of the bank requires above a certain level the audit to be done. So you'll have to first look at the policy of the bank as to at above what level they would mandatorily ask for the audited financial statement. Ask, see whether the audited financial statements have been filed along with the audit report answering to standards of audit. And you did, of course, would be mandatory on such a audit. Then due diligence report. What is a due diligence report? So there's a very old circular of Reserve Bank of India in 2009. It came out. It talked about a due diligence report. A format was provided therein in the circular itself. Uh, it is this due diligence report is to be obtained for all cases where there are multiple banking. A customer is basically has taken limit from more than one bank. There it becomes mandatory. It is to be given for half year. So for 1 year, there are two due diligence report. It is to be given by either a CS or a CA or a CMA. So again, very important that you verify. This is a very comprehensive report. It talks about uh, compliance with the accounting standards in the financial statement. It talks about whether there is any the end use of the fund. It talks about compliance with the terms and condition of the sanction letter. So there are a lot of issues which are very critical for us as a branch auditor. So wherever it is so applicable, ask the branch to provide us UD due diligence report and check and report accordingly. Then physical verification of securities and substantial deterioration in the value of the security. Now, the inspection report given by the bank office. This becomes very important. It is part of the duty of the bank to verify the physical security. And of course, if it is not been verified, then you need to report it accordingly. Because as a branch auditor, you cannot be expected to do a physical verification of securities. You should, my sincere suggestion is that you should avoid it unless until there are very compelling circumstances which require you to visit. Okay. Then, if in case there is a substantial deterioration in the value of the securities, then it may the reason for such a substantial deterioration in the value needs to be verified. It may be an indicator to a fraud. And if it is so that there is no specific reason which can be seen, or you feel there is a chance that a fraud has been committed against the bank, then again going back to the IREX circular, it may require the account to be classified directly as a doubtful asset or a lost asset. So depending upon the deterioration in the value. Again, here the automation, because RBI is talking about automation in the banking, you will have to see whether the automation in the bank is able to check for deterioration in the value, which I have generally seen the banks are not able to do it through an automated process. Please check and report it accordingly. Then deficiencies, which you have seen, overdrawings, inadequate insurance coverage. In case of insurance coverage, of course, you will have to see that it covers the maximum value of security, right? Then you please also remember you have to obtain a separate cover for burglary. It is not covered in theft. Theft and burglary are two different things. So, for in case the bank have taken an insurance, you need to generally obtain a separate cover for burglary. So that you need to check whether there is a bank clause in the insurance. So that also needs to be verified. Then there is a concept of a red flag account. What is a red flag account? So the first time the guidelines came in 2017. Now these guidelines are part of the Master Circular of Fraud issued by the Reserve Bank of India. It is applicable to exposure of 50 crores and above, right? What is a red flag account? It is defined as account where a suspicion of fraudulent activity is thrown up by the presence of one or more early warning signals. So later on, we'll see there is a concept of early warning signals. So RBI has given a list of early warning signals. In case in any of the account early warning signal is noticed, it has to be reported to the fraud monitoring group of the bank. If they see there is actually a early warning signal in the account, they would do a red flag of that account applicable to exposure of 50 crores and above. Now, where do we see that red flag? That's the biggest issue, because unless until we know where we have to verify whether it would be appearing in the CVS system, no, it would be appearing in a report called as CRILC, CRILC. It is an interbank platform given by the Reserve Bank of India. Any exposure of 5 crores and above, there is a reporting to CRILC every month, and every Friday there is a reporting of the status of the account. Okay, so for red flagging, please obtain the all the exposures of 5 crores and above. Please obtain this report of TRILIC from the branch. Okay. Then top 5 standard large advances. So RBI is saying that for top 5 standard large advances, whether they are covered under audit, whether they are part of large advances or not, you have to compulsorily cover those under audit. And any adverse features which you have observed in those top 5 standard large advances, you have to comment here. Then about leasing finance activities, you'll have to obtain the policy of the bank in relation to leasing finance, and then accounting norm also needs to be verified. Okay. Then it talks about asset classification, provisioning of advances, and resolution of stress assets. So the automation of IREC processing bank, September 14, 2020, the circular was issued. It says that all downgrade, so an account is standard, downgrading it to SMA category and then to NPA category, or upgrading the account from SMA or NPA to standard account would be done by the system. The provisioning, income recognition, derecognition shall be system driven. There should not be any manual intervention. In case there is a manual intervention, it should be done at a centralized location, generally not from the branch level. And an audit trail should be generated. This is very important for us to understand. An audit trail to be generated, and that audit trail is to be audited by the concurrent as well as statutory auditor. So your audit in the banks would not be completed, sir, unless until you ask the bank to provide you that audit trail where there has been a manual intervention, sir. System is classifying an account as an NPA. There was a manual intervention. The account was saved from becoming an NPA. It is a very important thing which the auditor needs to verify. So please ask the branch to provide you this manual intervention audit trail. Okay. And you have to also comment it upon here. You have to also see the reason why there should be a manual intervention, whether you accept the logic given for doing the manual intervention. Then of course, SMA 0, 1 and 2. And now this activity is a daily activity. Every day end, the bank has to mark accounts as SMA, NPA or standard, do a income recognition or a derecognition. Okay. Then memorandum of changes to be given wherever you do not agree with the classification of the branch has done. Then list of account where outstanding is in excess of 10 crores, which have either been downgraded or upgraded with regard to asset classification. The very important activity which I tell everybody is compare the NPA list as on 31st March 23 with the list available on 31st March 24. See all cases where the accounts have been upgraded. Check the reason for upgrade, whether it is as per the IIREC norms of the Reserve Bank of India. Check the account which have been downgraded, made NPA this year. Check whether the income recognition or derecognition has been correctly done. And in case of accounts which were NPA last year and continue to be an NPA this year, please check the date of NPA is not changing, or also check whether the account has been classified, the recovery in NPA accounts. So recovery in NPA accounts, the RBI says there should be a board policy which would decide how recovery in NPA account is to be adjusted. Generally, the banks provide for adjustment of interest first and then principal. So please check, because sometimes what happens, there is a recovery in an NPA account, it is credited to the account and the interest is not charged to the account. So actually in place of interest, the principal gets adjusted. So that we need to check. Okay. Then RBI guidelines on restructuring. So RBI guidelines on restructuring basically comprises of In case of agricultural loans for natural calamities, there are RBI guidelines for project loans. Then MSME accounts restructuring, there is a separate guideline. Then there was some guidelines in relation to COVID-related restructuring, and then there are other cases of restructuring covered by Part B of the Master Circular of 1st April 2023. Please look at those guidelines and please check those guidelines have been followed or not. Then upgradation, we have already spoken. Please compare the list of last year with this year and see whether the upgradation has been correctly done. In case of restructured account, the upgradation guideline says that if the account has become an NPA and it is because it has been restructured, it can only be upgraded. It is slightly different in case it is upgraded under MSME or it is upgraded in the other cases, but generally it provides for a satisfactory performance during a specified period. That specified period is generally a 1 year period from the first installment of principal or interest, whichever is later. From that 1 year period is seen. Satisfactory performance, the criteria differs from MSME to other areas, but that you have to verify and check whether the satisfactory performance were done before the account got upgraded, especially in case of restructuring. Then all cases of legal action for recovery, this you can only take as a branch confirmation, management representation that whatever are the cases of legal action has been recommended for recovery and whether the action has been taken or not on that basis. Then IBC, so it talks about IBC process under IBC. So how many cases are there where the account has gone into IBC that you have to verify. Then appropriate claims for credit guarantee, ECGC and others. So ECGC, of course, would be important. Please also look at a very, very important area, which is ECLGS. This ECLGS scheme was came in during the COVID times where some advances were granted on the basis of the existing advances, which were guaranteed by 100% by the central government. So there was a body, NCGTC, which was created for the purpose. Now, a lot of those accounts became NPA during last 1 year, 2 years. You have to check whether the claim was filed with NCGTC and check the status of that claim, sir. So if you look at NCGTC has issued a circular in which they have given that a lot of claims have been rejected of banks because they were either not complying with the terms and condition of the loan or they were filed with delay and all that they have written. So please check in all such cases where especially ECLGS loans have become NPA that whether the claim are live or they have been rejected and specifically reported here, sir. Then valuation report have to be obtained. RBI circular says that in case of NPA accounts, especially, the valuation report have to be obtained in like for 3 years, at least once in 3 years, or maybe even a shorter period if it is so required. Then compromise, settlement, and write-off cases. This is very important, and there is a circular which has come this time on June 8, 2023 of the Reserve Bank of India on framework for compromise, settlement, and technical write-offs. Please look at this circular. It talks about a board policy to be formulated for all cases of compromise, settlements, and technical write-offs. It is talking about that in what cases what benefit can be given. It is talking about who can approve a compromise. So it says the approving authority, whosoever is the approving authority, anybody at least one grade above that approving authority can approve a compromise. It is talking about in case a period of more than 12 months is given for making the payment. In case of a compromise, it may amount to a restructuring also. So this is also being provided. So please look at this circular, check for all such cases for compliance of the guidelines and obtain the board policy in this regard. Then execution of decrees, you will have to obtain the management representation for all such cases and legal files may be checked to verify the same. Then the recoveries have been properly appropriate against principal interest. This I have already told you that we need to verify. Centralized processing center. So wherever there is a centralized processing center, you need to verify that the document, sample cases, you have to verify the document and that has to be adequately commented. Then any other issues in credit review, monitoring and supervision. One I can find is legal audit of title documents or large value loan accounts. Exposure of 5 crores and above is mandatory. So please check whether that has been done. Then end use of funds is very important, sir. Last year we have reported 2 accounts as suspected fraud cases. They were very large advances. And one of the accounts, the branch accepted that there has been a lack of verification of end use by them. And ultimately, we reported them as suspected fraud cases. And because wherever there is a problem with end use, then it is a warning bell and the account would likely slip into NPA if the end use is not proper. So please verify that. Then there is a RBI circular which is applicable from next year. It is talking about that there would not be any concept of final interest going forward. That is applicable from April 1, 2024, and there would not be any capitalization of final charges going forward. But that is applicable from next year. Okay. Then non-fund based facilities. So Nirav Modi's scam actually told us about the risk in the non-fund based facilities area. So this is basically LCs and guarantees. Now, one, you have to give all cases where LCs were devolved or guarantees invoked willingly. They may have been settled with the account. The party, the borrower might have paid also, but then also the list needs to be provided here. And anything where it has been devolved or invoked but not paid, point 2 specifically asks for such details. And then it talks about interchangeability between fund-based and non-fund-based facilities subsequent to devolvement of LC or invocation of these. So basically where you're allowing a interchangeability. This interchangeability per se, if it is to cover the economic problem of the borrower, to cover the financial position of the borrower would amount to a restructuring. So that you need to keep in mind. Okay. Then, of course, suspense and sundries, we have to verify the entries. We have to verify any entries outstanding for long. We have to check for any unusual entries. I have seen cases where fraud was committed against the borrower went into consumer forum, the consumer forum awarded some compensation to the borrower. It was the compensation was basically given and part to the suspense account, which is not allowed. It cannot be considered as a asset. So that we need to keep in mind. And any unusual entry we need to verify. Then dormant and inoperative account. Again, there is a recent circular, January 1, 2024, which has come from the Reserve Bank of India. It is talking about not only inoperative account, but unclaimed deposit in banks. What we call as a DEF account, DEAF, DEF account. Please go through it, check in sample cases, what is the policy of the bank, and how the dormant accounts are getting operative, and whether the necessary process has been followed up. Then unusual large movement in the advances. This we generally see that to increase the total business of the bank, they increase the advances also, they increase the deposits also by transferring the money from loans to deposits. That we can verify easily by looking at the GL as on 31st March and maybe 4th or 5th April. You can see if there is any unusual deviation, then you need to go for it. Then it talks about FCNRB deposit. What is FCNRB? Foreign currency non-resident deposit scheme is there. It is applicable to NRIs and PIOs only. So the scheme basically is that it is a fixed deposit in foreign currency. It can be made by NRI or PIO. In case this person becomes a resident, he can continue the deposit till maturity, but thereafter it cannot be renewed. So what we are required to check here is that when the renewal was done, whether the bank has verified that the customer continues to be a non-resident, continues to be an NRI or PIO. Otherwise, the deposit cannot be renewed. Okay. And a small word of caution here, sir. FCNRB deposit may be applicable even to a branch which is not a forex branch. For every branch, it may be applicable. So you'll have to verify. Minimum balance. Now, for minimum balance, there are multiple circulars of the Reserve Bank of India. One, it says that in case the account is not maintaining minimum balance, you have to issue them a notice. The notice can be through online, through email, it can be through SMS, but you cannot just start charging. In case the customer does not then maintain the balance, then you can charge the minimum balance. But then again, that minimum balance has to be in proportionate to the level of non-maintenance. Okay, and no charges of minimum balance can be charged to an inoperative account. No negative balance can be created due to minimum balance. Then bill payable, sundry deposits. You have to obtain the details of these items. Any old entries, you need to specifically check for any old entries and check for them. Then contingent liabilities. This is again other than BG and LC. Generally, look at the legal expenses. Look at the vouchers. Any case where the bank is a defendant is at least a contingent liability. So that can be a good starting point for checking for contingent liabilities. Okay. Then profit and loss account. If you look at the profit and loss account, it is talking about test checking of interest, discount, commission, fees, rebate, excess short credit of a material. So the first point, of course, would be checking the correct rate has been fed into the system. The system would correct it, generally would calculate it correctly if it is correctly fitted. Okay, so you can check on a sample basis, verify and mention on. The income recognition norms, this we have already discussed, that it needs to be verified for advances as well as investments. Then interest on deposits, revealed any excess short debit or material amount, this we need to verify. Then overdue mature term deposit, unclaimed term deposits. There is a small change which came in 2021 from the Reserve Bank of India. It says saving account or the contracted rate of interest on the mature TD, whichever is lower. That would be the rate which would be given on these unpaid mature term deposits. And then any divergent trends. So basically, you will have to basically look at the P&L of the last year, compare it with the P&L of the current year to check for any unusual variation, any divergent trends which are not explained. Check and see what is the reason. And in case it is still not explained, you can mention it in the report. Then it talks about gold, bullion, and security items. Now, gold, no bank can sell now. Earlier, the bank used to sell gold. Now it is not allowed to be sold as per the directions of the Reserve Bank of India. But of course, there might be some stock lying at the branch that you need to verify. Then you may have to verify security items like term deposit receipts, pay orders, checkbooks, etc. lying at the branch. See what is the process. Is it system driven? Is it manual? Check whether they are in single custody, joint custody, take a management representation of any missing items during the financial year, and do a physical verification. Simple. Okay. Books and record journal, the last leg of LFA, books and record. So it talks about any software system, manual or otherwise, which are not integrated with the CRS. So this basically came due to the Nirav Modi scam, where the SWIFT system was not integrated with the CBS, which allowed them to use SWIFT for the purpose of sending those LOUs, LUTs without entering that in the system. So please check whether there are any software, etc., which are there. SWIFT has a counterpart, SFMS, for reporting on for inland transaction. When you check, in case you are handling a trade branch, when you're checking for SWIFT, please also check for SFMS, right? And any financial implication of the same needs to be checked. Then IS audit. In case an IS audit has been done at the branch level, you have to obtain the IS audit report, check for compliance. Any critical pending issues you need to verify and report it. Then it talks about exception reports and verification of the exception report. So there would, as part of the RBI policy, every branch would generate an exception report on a daily basis. That has to be verified by the branch manager, and you have to check the process of verification. Check whatever action was required to be taken based upon that exception report, whether same was taken or not. Okay, it should not only be that the branch manager takes out a printout and files in some folder without actually verifying this. Then it talks about manual intervention. It says manual intervention is where there is a manual debit to income or interest account, right? Or a manual credit to some income, some expense account. So that you need to verify. Ask the branch to provide you the list of all cases of manual intervention and verify on the sample basis whether the same was justified and the approval was obtained from the appropriate authority for this. Then it comments on data integrating, data entry, checking correctness, data integrity. So basically it is for MIS at HOCO level where data is to be sought from the branch. So you'll have to first obtain what are the cases where MIS has been prepared at centralized level where data the branch is provided. And then you will have to check the correctness of that data and all certain cases. Then inter-branch account. So inter-branch reconciliation is generally handled by a different team, but you will have to check for any pending entries, any pending inter-branch items. You'll have to obtain a management representation. Generally, there is a report which they can show you that they are nil inter-branch items or whatever are the pending inter-branch items that you need to verify and check for any financial implication of this. Right? Then frauds. Frauds, the reporting happens through a system called as FMR. Okay, there is a report called as FMR1. The reporting is to be done within 3 weeks of detection of the fraud, right? And in case there is a report fraud of 5 crore and above, there is a flash report which goes in within 1 week of detection of the fraud. So that we need to do. Okay. Frauds, then it talks about any frauds which have happened on any areas, potential risk area where you feel a fraud can be committed against the bank. So that you need to comment upon. Early warning framework we have already discussed along with the red flag accounts. We are not going to repeat. Then KYC and AML. Again, another area which has a lot of work to do. So we'll have to do some sample cases based upon KYC of new accounts, check some KYC on new account. If the account opening is been handled at the branch, then re-KYC. So 2 years for high risk, 8 years for medium risk, 10 years for low risk. Then AML has many compliances. Then it may include 10 to be obtained for transaction as per 114B of the income tax rules. Then opening of account, term deposit for exceeding 50,000, FD, the repayment for more than 20,000 rupees, then encashment issue of forex. So you can take samples, of course. Also take the cases of any suspicious transaction reporting which the branch has, or take a management confirmation in case they say that we have not done it. That is important. Then management information system. This is basically again related to MIS corporate office. Then miscellaneous LFAR is basically talking about reports. So you are not the only auditor in branch. There are many other auditors who have done audit. That's a good thing. Please obtain that audit reports. Verify those. You have to, in any case, verify it for LFAR. But that would also help you in designing what are the weak points in the branch, what you need to check, what the compliance also is very important. So that all we have to report here. Then last is any other matter. So basically any other matter which is not specifically covered in any of the preceding areas that needs to be verified here. One which I have frequently reported here is unauthorized softwares or unlicensed software downloaded on the system like games or you see password sharing, etc., which is happening. This is a very critical area, sir, because all CBS systems are interconnected. Even if one node is compromised, it will result in compromise of the whole system of the. So games, somebody might feel is very it is okay, he is doing it maybe in a free time, but that games may create a backdoor for some malicious activity to be done on that system. So it is very critical that we keep that in. Okay. Then there is a specific question here in relation to foreign exchange branches. So in case you are handling any foreign exchange branches, then this area would be applicable to you. It is talking about deposits, advances, export bills, bill for collection, then dealing room operation. In case the branch has a dealing room, generally every forex branch does not have a dealing room, so it would generally be handled at a treasury level. Okay. Any other area, then nostro accounts. If you have the branch is actually handling a nostro account, so it is a category A branch, then it becomes applicable. Then in case the branch is having clearing operations, and in case you are handling a asset recovery branch, then you have to basically specifically cover a specific area. So this is what I wanted to cover, sir. Now, if you have any questions and answers, we'll try and cover those questions and answers.
Yes, sir. Thank you so much, sir, for such a wonderful deliberation on LFAR. We have received certain questions. May I start the proceedings of this question answer session? May I
Please,
request Sudhir sir to please start the question answer session, sir, from your side.
Okay,
Sudhir sir.
Yes. We have received certain questions on Tara. Wine. Hello, Namaskar. Sir, we have received some questions from the members, from the participants. The first question is, am I audible, sir?
Yeah, please, sir.
If there is difference in the interest rate, feed it in the system, whether the MOC is required to be paused for the difference in the interest amount, and if branch charge the difference after the balance sheet date, whether it is correct? Why?
You will have to basically see it from the material angle actually. So if it is material, the amount is material, then of course MOC would be required from your side. If it is not so material, then of course a comment in the LFAR would be sufficient. So you'll have to see it from a material angle. So the amount of impact may be only 10,000 rupees. So it may not be material for the auditor. So in that case, a comment in the LFAR would be sufficient.
Thank you. Then another question is, in some cases, as large documents are lying at RSCPC or SME branches, how can we verify the documents for the advance sanction in that year?
So the RBI circular also, the RBI guidelines also, if you look at LFAR, it talks about loan processing centers, and it basically says that in case of loan processing centers, the sample needs to be verified by the auditors. So it is very clear the RBI also wants us to verify that whosoever is the branch auditor, in case the loan documents are not with them, in the sample cases, he verifies either he visits the loan processing center or the documents come to the branch. That can be managed, but ultimately it has to be verified by the branch.
Whether all large advances have to be verified, sir?
So large advances will have to be verified. There is
we will have to verify.
Yeah. And in case of other cases, on sample basis, you'll have to.
Thank you, sir. Thank you. One more question is that when the RBI inspection was done at the bank branch, then whether there is any proof of evidence in the system of the bank branch that the SBA could know the RBI inspection was done at from which date, this date to that date.
So there is
date
no
of period covered in that.
Right. I have
what the member wants to know that.
Sir, I think there is no. You will have to take a management representation as to the audits which has been done at the branch. Generally, you will not be able to detect it otherwise. So you will know there is an internal audit. So you can ask for the last internal audit. In case there is a concurrent auditor, we will know it. But for other audits, and especially audits done by maybe RBI or even sometimes SEBI does it in case the branch is handling demat operations, that you'll have to take a management representation only. There is no other way of actually verifying it independently. The management representation will suffice, sir? It will suffice. When you cannot check something from the system, there is no independent way of verifying it. You will have to somehow rely upon the management representation only. See, ultimately, when we do audit, we generally say we rely but verify. So wherever we are not able to verify it independently, we'll have to rely upon the management. Sir, that fact has to be mentioned in that LFAR. That has to be mentioned, sir. That has to be mentioned. And of course, management representation is a very, very important step in any branch audit. You have to obtain a management representation. Practically, you may have to prepare it yourself and get it signed, but please obtain it, sir. Then we have to get it signed. Sir, one more question is, sir, that if both the keys are used by one person and after our pointing out during audit, they correct it. But means dual control was not maintained. So when you have verified if it is been done, so in your presence, so they will do it independently only. But ultimately, that is the policy of the bank. And this is very critical in case of ATMs also. When you verify ATMs, we have seen last year we reported it that a single person, so the ATM had two controls in terms of one was a key and another was a password. A single person was handling key also and the password he was inputting. So, and this may be a very serious issue because somebody can visit. So in case of branch, it would be closed. In case of ATM, it is open 24 hours. Somebody can visit, open the vault if he has access to the key also and to the password also. Suppose it is open by key and password. There are certain ATMs which are open both by passwords only. So it will depend from model to model. It can create a very big risk for the bank. So please report it accordingly on the basis of your area.
It's
This
fraud
is a
prone
very,
electronic.
very risky fraud prone.
Very risky fraud prone.
And we have seen cases of fraud happening in this space.
Thank you so much, sir. Thank you, sir, for
Thank you
guiding
so
us.
much for your patience.
Gaurav sir, you are having any query?
Yes. Sir, there's a question that mobile loans for purchase of personal items without a security maximum of 50,000. A customer has taken 10 loans using system weakness totaling 5 lakhs and it has become NPA. Does it categorize as a loss asset and a provision for 100%, or the system is providing as NPA within 1 year? There's no security involved in it.
So I think the biggest point here is that one, he has manipulated the system, so the intentions are not right. Secondly, in case of mobile, the chances of recovery would be very, very less because it is a movable item. So unless until you somehow get hold of that person, it is practically impossible. And then the value of that mobile would also be lost. So once you purchase a mobile, you open that box, the value depreciates immediately by 20-25%. And if 1 year has elapsed, practically the value of the mobile is less than 20% or 10%. So in any case, it would amount to a loss asset.
So
Right.
There's another question, sir. How to find red flag accounts? Can you please highlight
So
some
red flag,
points?
I told you, sir, the important point is that you have, for any exposure of 5 crores and above, please obtain the CRILIC report as on 31st March from the management. Red flagging is actually reported in CRILIC. It is not reported in the CBS system. So unless until you obtain the CRILIC report, you will not be able to check for any red flag. In case there is any red flagging either by your bank or any other bank for that borrower, you will be able to see it through the CRILIC report.
Sir, there's another question. LFAR for Grameen banks is quite different from commercial banks LFAR previously, and now both LFARs are same for reporting purpose. Can you please clarify any other points required to be verified in case of Grameen banks?
No, so basically, see what has happened is basically the RBI is now coming to the idea where, in case of cooperative banks and all other types of bank, they want to have a single interface. They do not want to have multiple interfaces. So that is the reason why the reporting formats are being harmonized and a single reporting format has been done. And the policies also, the circulars also are being harmonized to a great extent. So that is the reason why it is so. And in case of Grameen banks also, because the amount of advances would be generally on a lower side and the number would be very large, you will have to understand the local issues and the local loans which are basically granted and then report accordingly. So large advances generally will not be applicable there, but this is something which has to be kept in mind.
Sir, how is it possible to identify such loans which are utilized for buyback of its own shares by a company?
So one, I told you that it can be only be applicable to a corporate borrower. What we do is in case of corporate borrower from the last balance sheet, or say on 31st March 23, it is available. We check on the MCA website, check for the paid up capital. In case there is any such decrease, then only we can see the reason that if there is a decrease, then either there is a reduction in capital or there is a buyback of share. Then maybe need to investigate further. Otherwise, you can basically take a management representation for this.
Sir, in case of term loan, installment of January is partly paid, then can we classify that account as NPA? Because the
So,
norm states that interest or installment of principal remaining overdue for a period of more than 90 days.
right. So if it is more than 90 days, you can do it. You will have
Yeah.
to calculate based upon the RBI circular in this regard. So say the installment was due on 1st January 2024. The 1st January 2024 would be the first day. And then the account, that payment should not have been received by 31st March. And so then it will make it 91 days and the account would
Yeah.
settle.
So one last question. The branch has sanctioned BG limit to the unit and borrower has taken the FBG from the branch and received advance against the FBG. Now the unit is claiming that it is for moving equipment for road and purchase of equipment and cannot be reduced from the DP working.
So
So can you?
in case there is a non-fund based limit, there is no concept of a DP per se, right?
Okay.
But I am assuming there is a fund based plus a non-fund based limit. In case there is a fund-based limit and certain amounts have been purchased from an advance received from somebody, then of course it cannot be part of the DP of that customer. Of course, it would depend upon the bank policy because it is not paid by the customer. So if you actually allow a amount which has not been paid from the pocket of the customer, a DP to be calculated on that basis, then it may amount to a double financing or financing something which the customer has not paid for. So the margin of the bank may get eroded. So of course, not a something from a very practical point of view should not be considered as part of DP.
Sir, are there any confirmations to obtain and to keep on record in respects of accounts or securities that are transferred to RACP?
No, sir. So it is within the bank only. So you can maybe take a confirmation in case it is still appearing in your books that like it has been handled by RAPC, but otherwise, because it is within the bank, there is no issue.
And for loans to women self-help groups, what are the documents that need to be verified?
Sir, it will depend upon the bank policy because there is no specific RBI circular for this regard. So it would depend upon the bank policy in this regard. And based upon that, we will have to verify.
So thank you, Lokeshji, for answering all our queries. Now I would like to hand it over to Anilji.
I have one question, please.
Yes, sir.
Yeah.
Can I ask, sir?
Yeah, please.
In case of recovery in NPA accounts after the balance sheet date, say on 2nd April, number one account is regularized. It is standard on 2nd April. Other is that account is adjusted. Account paid. Well, there are two cases. What the auditor should
Sir,
do?
if the recovery has happened post 31st March and the account gets regularized, that cannot be considered for checking the position as on 31st March. For something which has been fully paid and the account is closed after 31st March, this is my personal view. Somebody might have a different view on this. That can be considered. The reason is because what is NPA and provisioning is that we provide for a probable loss which the bank is going to suffer. And if the account itself is closed, then there cannot be any chance of a probable loss to the bank. So to that extent, I can take a view that the account itself being closed and there is no chance of a loss to the bank. The provisioning or NPA classification may not be done.
Yes. Thank you, sir. Thank you so much.
Thank you so much, sir, for such a detailed and wonderful deliberation. And hats off to you. You have justified with your presentation. And I would like to inform everyone after this presentation, after 15 minutes, again, sir has to speak for 2 hours. And at 6 p.m. again, sir has to speak for 2-3 hours. So thank you so much, sir, for sparing your valuable time. And apart from having very, very busy schedule, you have acceded to our request for this deliberation for our members. So thank you so much on behalf of AASP. I also extend my heartiest thanks towards the past chairman of Abhisar Branch CA, Sudhir Kumar Kheda ji, as a moderator, as well as Gaurav Mani ji as a moderator, for their wonderful coordination and asking questions to the today's speaker, and for overall coordinating this webinar for 2 hours. So thank you so much, Sudhir ji, for your precious
Yes,
time.
sir. Thank you.
And, giving your input side by side also for this webinar. And I also thanks Gaurav ji for his wonderful coordination. So thank you so much. I also thanks all the participants of today's webinar. So tomorrow again we are having the third part of this series. Tomorrow at morning at 11:30 a.m. So I request all of you to please join tomorrow at 11:30 a.m. for this
Sure.
various IRAC norms and various preparations for the audit, that is planning for bank branch audit. So I request all of you to please join tomorrow at 11:30 a.m. Thank you so much. Thank you.
Thank you, sir.
Namaste.
Thank you, Ji.
Namaste.
Namaskar.